2026 national budget. But here we are. Let's start off our conversation with just getting your assessment on implementation of the 2025 budget. What's been your assessment of it?
Okay, it has fairly done some good, fantastic jobs, especially that we have the, medical cut in terms of the donation or grants, which also has been presented with now some options that we need to work on. And obviously, when you look at the key revenue streams, we've actually been facing challenges on the VAT as well as mineral royalty because of certain sharp changes that we have actually been experiencing in the policy framework. And what we have seen overall is that the model of resilience has been impacted so much around, social welfare, where we have also seen that we have remained consistent on the education as well as the health care. So averagely, we have done something better compared to what we should have been able to experience if we did not put models of resilience. And also what I should be able to say is that I think overall we have had some situation in the first quarter where we had a very huge deficit compared to what we have actually been doing over time now. So the deficit from first quarter, second quarter, and the third quarter has actually been reducing. So there is a possibility that we can even land, the budget performance in the macroeconomic objective, which is focused on trying to make sure we have a single digits within the deficit itself.
So you think it's possible, for government, to reach the growth rate of 6.6% inflation, to reduction of also 6.8%? Do you think we'll be able to achieve this by December? Is this truly attainable?
The possibility of reaching 5.8 is there, quite very high on high standing, owing to the fact that we've got a very strong rebound in non-mining activities, especially with the bumper harvest that we recorded this year, and also the consistency that we have maintained in the sector. Particularly also even looking at where the tax inflows are flowing into the ZLA. So we've seen that, yes, there is a possibility that we can attain something closer to 6, which is actually standing at 5.8%, yes.
So with that, how, I know for people, the most intense question for the people is, when do we get to see that? When do we get to feel it? When does it get to translate on the ground? Because all that is just paperwork to the Zambians.
You see, this year has been quite a very important year because we have actually stabilized the macroeconomic environment. Obviously, we've seen that is the stabilization of Kwacha and also the aspect to do with the, the interest rate across the band. We haven't seen any of the sharp changes as it were. That's the reason why even seeing that the Bank of Zambia has sustained, the monetary policy rate for 2 times now, owing to the fact that we've got, some good elements happening from there. If you're even just to look at the composition of tax inflow, we are talking of import duty to be performing at peak, which is actually balancing up from there. Even when we have losses that are being made on the mineral royalties, at least we have balanced up. If you to even look at the performance in the second quarter, we had a very healthy, revenue that came from different, mining houses, as well as even just other businesses that are outside the mining sector. So that tells to say that at least we are basically working out something better. The combination of good tax inflow as well as the aspect to do with the microeconomic convergence that we are seeing, and also complemented with the sector performance that we have seen, like mining, agriculture, tourism, and many others, have actually shown that there is a positive development that is taking place equally in this year. So I think even when you look at the performance by quarter, about I think four sectors in the first quarter were performing at peak. Then second quarter, we saw about three sectors performing at peak as well. And this quarter, which we are ending this month, we're seeing also about 4 sectors that are performing at peak. So that tells a good story that we are going to land the economy on a soft landing as we go into next year's challenging year. It's quite a challenging year in that it's going to be having a lot of combination like elections and many other aspects that we can also see from there. But overall, what we are seeing is a scale of balance that is taking place in this particular year.
So in grade 4 English, things could get better next year for the people.
We might be able to see some good soft effect that you can actually witness from there compared to what we have seen. Where we're coming from as being a very bumpy road.
Right.
But what we are trying to build up, I think it's something that is bearing some good residue effect compared to the periods where we were seeing things difficult.
I'm sure Group 3 is happy about that.
Yes.
Now, with you mentioning different sectors, let's just also just evaluate the primary budget priorities for the year 2025. Just highlight those for us.
Okay, so we basically had focused interest on education, which had beefed up with a very huge budget share, which also complemented with healthcare. But I'll have to say that the healthcare has first challenged, where we have seen that there has been some withdrawal of donor support. And by extension, also the grant has been disturbed. It has been underperformed in the current fiscal year. And also, what I should be able to say is that, of course, the mining sector has been given critical attention, and that's the reason why we're even seeing this complementing strongly with the good output, where we recorded even 30% of export in total. And again, what we have also seen, given more policy treatment, has been issues to do with tourism, which is also complementing very well with transport and logistics as well, ticking on the positive direction as well. So overall, what I should be able to say that at least we have done some good quantifiable impact in terms of sectorial performances, and that also complementing with now the macroeconomic objectives of having to go across or toward the single digits in inflation, and also sustaining the interest rate within the manageable scales. All these are speaking from that perspective. Maybe what we just need to do is to watch only some of the risk factors that we are standing potentially very strong, especially when it comes to the fluctuation that is happening in the kwacha, and also looking at the aspect to do with the climate change, which can affect both energy and agriculture. Above all this, I think we should be able to speak to say that we are doing something correct in terms of trying to also massage around policy models, especially when it comes to energy sector. Yes.
Now, with what we have seen this year, I know others speaking more into the social side of things and improvement on social welfare. How much of an impact has that been, especially with the introduction of things like cash for work and continuation of cash for work for just the cushioning of people's livelihood? How much of an impact has that been for the year 2025? I mean, coming from a drought that was last year, but here we are now. We recorded in the last rainfall, we recorded above average rainfall, and this has continued when we speak into social welfare. So how impactful would you say this has been on people's livelihood on the ground?
Okay, so it might not just be a direct effect as per se, but I'll tell you, between you and myself, we might not be able to have outbreaks like cholera because we are cleaning up our drainages, we're cleaning up places where it's critical, involved with health and hazard issues. So the impact of social cash transfer emergency models are also giving that good effect on the health side. On the broader perspective, we are seeing that the environments are being cleaned up from that perspective. And then when it comes to cushioning the consumer impact, Obviously, when you have a little disposable income that is coming from there, it's cushioning the aspect of unemployment. It's helping also, by extension, instead of you giving your cousin who might be having challenges out there, some bit of money that you can share with, they are also getting their own money, getting through that model. So that is what is actually impacting from that perspective. So meaning the broader perspective of social cash for transfer aspect also, and also social for work, basically giving that effect for you not to have stressed situation, especially in families where maybe some of you are breadwinners. So that is what actually is impacting from there. And also even when it comes to the aspect to do with the cost of living, I think that is something that is working in a very good model. It might not be able to have that impact, but at least we are cushioning the issue of unemployment, which has been accelerating in excess of about 6 million plus. The formal situation is that we have got about 10 million working population. So out of that, we are only remaining with about 6 million who are unemployed. So that tells a story to say we need to look more into social protection and see how best we can also gravitate investment appetite to drive production and meet up the needs that is posing in the country.
Critics argue, especially with cash for work and it continuing, we heard from the president that cash for work would continue. It was supposed to end a couple of months ago, but he has said that this will continue. And critics argue that it's not such a good decision to extend this. Now, from an economist's point of view, what maybe could be the negatives around the extension of such, which was supposed to be an emergency cushion for the people, but extending it to serve longer than it was intended?
Obviously, the most immediate aspect there is that we would tend to balloon our debt position. And this also becomes quite a challenging factor as far as fiscal discipline is concerned. We're trying to contain that management of ensuring that we're using our resources within the means. But if we tend to expand more, that also brings a breeding point for us to land deficit, which will continuously go in that direction. But again, also the good part that some of these are targeted measures which have also been supported by multilateral players, especially the IMF as well as the World Bank. They are supported so much into this aspect. So what we are able to see is that there is a balance also. That's the reason why the model of application law in terms of IMF, decision making and conditionalities are also inclined to look at the social welfare. It's not just looking at supporting the sectors. They're also looking at how can we work out a model of supporting social welfare at that particular point, or even at scale. So that's what is happening right now. So it's not an issue of just washing away the importance of supporting the cash for work means. Maybe I can even just give you a typical situation here, is that it's very difficult to grow the economy when we've got high level of poverty, when we are not balancing up the scale. Especially when we have, maybe for loose word like prostitutions, or we've got thieves. We cannot grow the economy for that kind of situation. So we need to find a way of trying to safeguard other people, ensure that we have some safety measures that can be put in place to safeguard them. And this cash for work and many other social welfare funds are really helping that direction. Imagine if we do not have such kind of situation, we would have thieves all over the places. So that is somehow giving people to be more busier and helping them also to see the means of living from that perspective.
How different do you see, I mean, with America withdrawing the aid, USAID pulling out, that's a lot of funding that contributes
Finally.
In conclusion, that contributes to Zambia. And I bet that money is banked on to say, okay, at least we've got this, maybe we can cushion. It's helping us, sort A, B, C, D out. Without that, how different do you see the budget presentation going? How different do you see these sectors looking? Health now needs more funding. Where are we going to get this funding? I don't know. We're talking of education and so on. How different do you see this budget?
It's quite an interesting aspect, and maybe the beginning point also is that I have learned out of a number of thoughts around this, and my proposal to this that it's now high time that Zambia should invest now into medical fund. We need to establish a medical fund that can help to salve some of those effects. Should it happen that we don't have more funds and donation, then we're able to at least get something from our reserves on the medical side. Then secondly, we need also to look at mineral wealth resource fund as well. When we have windfall, activities happening where taxes and production is on high scale, everything is happening. There is maybe a cycle boom in the commodity prices. This is when we should also be able to get a small percentage in conditionality, saved toward the future lane. Should it happen that we have a situation where it's actually challenging, we are able now to go on such kind of situation. So now coming back to your question, what we should be able to see is that we have a way in which we can constrain our limited resources to also direct into where we are also finding ourselves failing. And it's important that we need also to see how best we can work out those critical sectors like health. That is where we are seeing half of the budget, which was in support, being withdrawn from there. So it's important that we need now to see how we can, make a better scale in as far as budget share is concerned, as education also is demanding. But what we see, even when it comes to the future budget, as the minister will be pronouncing this week, we are basically seeing more social welfare targeted budget going to this. And much of what we can also see is that we need also to look at other means like infrastructure projects, particularly energy diversification. We've been facing challenges with the energy. So it's important that we also need to direct resources toward the, energy, so that we can see how best we can work it out from there. And much to this also, we need also to do more of rural connectivity routes, because rural areas are the ones that are producing more food for us. And it's important that we need also to safeguard the post-harvest elements around production that we make in agriculture. So all in all, maybe to sum up this, I think the budget will be more tutored on fiscal consolidation, making sure that we do models that should be able to sustain and continuously work on the template that has already been established. Because this year, performance in terms of the budget set a precursor for next year, except that we have got some extra, cost factor that we need to look into. And we also need to make sure that the budget next year does the balancing between the electoral demands as well as the discipline.
Okay.
Yeah.
Well, Mr. Sanga, I'll end on that note. Thank you so much for joining us on the Diamond
Thank
Breakfast.
you. My pleasure.
We were talking to economist Kelvin Chisanga, just reviewing the 2025 budget and also speaking into expectations for the 2026 national budget, which will be presented by Minister of Finance this Friday. We go on a break. When we get back, we'll be talking into an event that is themed Getting the Impossible. Stay tuned.